Tesla's stock had a very strong last week. Are we set up for another strong week? We'll go over that here in this video. My expectations for Tesla stock and how big money is positioned. Are they positioned in options in a bullish or bearish manner? Now, it's important to keep in mind we will have economic data this week. We will have the Fed as well as earnings, and I'll give you a rundown of my expectations for all of this and how this can impact Tesla. I'm going to try and keep this video short, sweet, straight to the point. If you like shorter, simpler, more precise videos, let me know down below in the comment section. Another thing you can do is hit the like button as well as subscribe to the channel. If this video gets an outsized amount of likes, then I know, hey, most people like shorter videos. It just happens to be most of the time there's a lot of information to cover in these videos, and that's why they do tend to be a little bit on the longer side. So the first thing that I want to point out is on a technical basis, you're between the 20-day moving average, which presumably will serve as support if you do get downside this week, and your 50-day moving average, which will likely be some kind of resistance. Now, it's important to note you have went from $138 per share to $173 per share. That's been quite an upside move, and you were actually overbought or oversold on the RSI down to as low as at one point about 27. Now you're sitting at 51.88. So you have seen quite a strong upside move. That's pretty obvious. And after these kind of moves, you tend to get a little bit of consolidation. And I think that's what happened on Friday. Tesla stock was down 1% on news that two Democratic senators are trying to, quote unquote, limit autopilot to roads it was meant for, which a lot of people pointed out that autopilot was kind of meant for all roads, so it really doesn't mean much. And I don't think it will have any impact on Tesla or FSD entering into a more developed phase. Okay, it's not going to be banned. That was just an excuse for Tesla stock to consolidate a little bit. And that's actually very healthy. The fact that you did consolidate sets you up for more upside, potentially, in this upcoming week. For this upcoming week, you do have calls for the open interest, meaning the total amount of options bought and held currently in people's brokerage accounts for this Friday's expiration. About 41.6% of them are calls and 58.4% are puts. Now, a lot of people, I imagine, were buying puts heading into Tesla earnings, and you're still seeing a lot of those puts that were bought reflected in the open interest numbers for this week. The reason I believe this is because if you look at the strike that has the most open interest for this upcoming Friday, it is the 140 put. So the 140 put has about 29,000 for open interest. So I think a lot of that was just, hedge funds, institutions, money managers, or retail investors going out and buying some puts on Tesla in case earnings went the wrong way. Now, the second largest strike of open interest is the 180 call. And here's where it's important, because you have open interest of 18,000. A lot of this could have been pre-earnings positioning. A lot of this could have been people buying last week, this 180 call. Because if you take a look at Friday, the volume for this 180 call is 69,000. So there was 69,000 contracts traded around the 180 call expiring this Friday. Whereas if you look at the 140 put, the strike that has the highest open interest currently, there was only 21,000 for volume on Friday. So considerably lower. Even the 160 put only had about 45,000 for volume on Friday, which, the 180 call was, 25,000 higher than that. So it definitely looks like positioning you've seen post Tesla earnings was pretty dang positive in Tesla stock, but pre-earnings, there were a lot of bears. So this data would actually suggest to me, while there is a lot of bearish positioning for this week, the new positioning that we're seeing is very positive. So from that perspective, it looks like people are betting Tesla stock does go higher this week. Also worth mentioning, short sellers have lost about $3 billion in this, call it $140 to the 173 level. They've lost a lot of money already, and you've only seen about 1 million shares get covered on. According to this data, you still have 106.42 million shares that are currently sold short. That is up from about 81 million shares 3 months ago. So just imagine that. If shorts really did start to cover on short positions, it would get a lot better from here in Tesla stock. And I would imagine Tesla could even break out into the 200s in that scenario. So keep that in mind. That's not an investment thesis or trading thesis just because a stock is heavily short that it can go higher. But if these other events play out in a specific way, this can definitely have a outsized bullish effect on the stock. Okay, so this week is really categorized in 3 different categories. You have the Fed, and I think that's a category in and of itself. You have earnings, as well as economic data. I have talked about the earnings calendar for this week in a couple different videos, so I'm not going to run through each individual company. Pause the video, take a look for yourself, or go ahead and follow the X account. I will reshare this right now so you guys can see it. It's Michael Tyler over there. Very easy to find. You do have a ton of earnings, and you're really getting into the heart of earnings season this upcoming week. You have had some big tech names report, some semiconductor names already start to report, like TSMC last week. You obviously had Google and Microsoft and Tesla and Netflix that have already reported. But Tuesday's your biggest wild card day, in my personal opinion. I think Amazon's going to have good earnings. I think that's going to be positive for the markets. If Amazon has bad earnings, I think that's going to catch personally me off guard, but a lot of other people as well. It's AMD and Supermicro. Supermicro really started some of the fear in your AI sector of our markets about 2 weeks ago, because normally when they come out and say, hey, we're going to report on whatever it is, June 1st, they'll come out like 2 weeks before and announce that their day they're going to report earnings, it's called confirm it, but they will pre-announce and they will say, hey, we're going to beat. And they did not do that this time, presuming that they might miss. And expectations are high, right? As you continue to do well, expectations just get higher and higher and higher. And if Supermicro does come out with bad numbers, or AMD, that's going to be very problematic for the AI trade, because the AI trade is a big reason why stocks are where they are today, or the S&P and the NASDAQ on a headline basis are sitting at almost all-time highs. A lot of that has been based on the AI enthusiasm people have seen. And if Supermicro or AMD, as I've been calling it, wets the bed, that's going to have a very negative impact to NVIDIA, but also your other big tech names, even Microsoft and Google, that have already reported earnings. So I think these semiconductor names, specifically Supermicro and AMD, are the biggest wild card for this week in terms of what could actually move the markets with this earnings season. Obviously, if Amazon wets the bed, that's a problem as well, and that would not be good for markets. But I don't think that's going to happen, personally. Now, Thursday, you're going to get Apple that reports earnings. Apple's probably going to have bad numbers. Apple has not done well in 2024. The markets have just shrugged that off because mainly the AI trade is what everyone's focused on. So you can imagine a scenario where the AI trade gives up. Yeah, it could be a bigger problem. Now, Apple reporting earnings on Thursday, I really don't think it matters what Apple reports. I think it's kind of irrelevant at this point because Apple's not the stock that's leading the markets. Sure, could it have a downside impact to the S&P and the NASDAQ? Of course, but that can easily be offset by Amazon, Microsoft, and Google prior good earnings that we have already seen. The second component of this week in terms of catalysts that will move the markets in a big way, that is the Fed. Now, Wednesday at 2 p.m. Eastern Standard Time, you're going to get the report coming out. Now, there's a lot of speculation that the Fed is going to start their reduction of the balance sheet, right? So the Fed has been reducing the balance sheet by $60 billion a month of treasuries and $30 billion a month of mortgage-backed securities. investors are expecting they're going to slash those numbers big time. And I think you get some news of that coming on May 1st on Wednesday. And that can be very positive for markets. Now, you're going to get the conference at 2:30 from Powell, as you always do. He'll get up on the podium, he'll answer questions, he'll read off the pre-written statement. The thing we really want to watch for is, does the Fed start to talk about raising rates? I don't think that is going to happen. And if that does happen, well, you have an even bigger problem on our hands. But I don't think that's going to happen. I still think that's a very low chance at this point. Now, I don't think the Fed's going to be forecasting a ton of rate cuts, although we did get GDP data that came out last week, quarter over quarter, about 1% lower than estimates. And it's pretty clear the next, couple of revisions that come out are probably going to push that number even lower. So the Fed does have a reason they could make to justify starting to reduce rates. That GDP number did not come out as good in Q1 as expected, not even close to as good as expected. And I think the Fed is going to highlight that, okay? But I think really, long story short, the markets are only expecting one cut in 2024. And I do think the Fed may signal more than that. At the bare minimum, they're going to signal they still plan to cut rates in 2024. And the market's only pricing in one cut. You're already priced for that. You're already priced for at least one cut. If the Fed signals any more than that, that can be an upside surprise to the markets, and that can be really good news. So I think statistically speaking, the only way to upset markets' expectations is if the Fed says they don't plan to cut rates in 2024 or actually raise rates. Either one of those outcomes would be negative for Wednesday's Fed meeting. But again, I think the Fed has their reason they've been looking for to start thinking about reducing rates. And that was that lower than expected GDP number that came out last week. Now, if the Fed is kind of just status quo, they don't change much, they still are forecasting rate cuts to start in 2024 and maybe even forecasting a couple of them, 10-year Treasury yields alongside, I should also mention, the reduction of the balance sheet runoff, that can have a very positive effect on pushing yields lower, right? So 10-year Treasury yields, they could fall, and that could also be a big benefit to Tesla. And bottom line, that's really my expectation for the Fed on Wednesday. But keep in mind, if we rally tomorrow, Monday, if we rally on Tuesday, you probably want some puts heading into the Fed, just because if the markets go up or down, it's changing expectations. Now, if stocks do nothing, kind of trade sideways Monday and Tuesday, you probably still want to be in calls coming Wednesday. I think you still get a very positive reaction from the Fed on Wednesday. If markets sell off again Monday and Tuesday, then you definitely want to be in calls for the Fed on Wednesday. So you kind of want to play it by ear, if you will, as far as trading strategies. But I think overall, the Fed's going to be positive for markets and positive for Tesla. The third aspect of this week is economic data. So on Monday, on Tuesday, basically every day of this week, you're going to get small points of data. Bond auctions, Dallas Fed Manufacturing Index on Monday, some data coming out of China Monday, manufacturing, PMIs. All of these little pieces of data can be important, but I think the markets are really going to focus on earnings and your big data as well as the Fed this week. So I'm not going to highlight all of this, but you do have S&P Case-Shiller home price month over month, year over year coming out Tuesday, CB consumer confidence and Chicago PMI on Tuesday. All of that coming out in the morning in between 8:30 a.m. and 10 a.m. as well. Now, Wednesday, you're going to get your first round of big data. You have ISM manufacturing PMIs, expecting that to come in at 50, which is neither expansionary nor contractionary. Okay, so that would be right in the middle. JOLTS job openings are expected to fall about 300,000, if I'm looking at that correct, down to 8.72 million. So the lower that number goes, the less job openings there are, the weaker the economy is. a business that's looking to hire 5 employees is probably doing okay. A business that's looking to hire maybe 1 employee is probably not doing as well as the business looking to hire 5 employees. That's kind of the way to look at that. And then obviously you'll have the Fed on Wednesday. We already talked about that. On Thursday, you're really not going to have much as well for big data. On Friday, you're going to get the non-farm payrolls and the unemployment rate. It's possible the Fed gets this data on Wednesday. So I think that could get interesting because the Fed has said before they can get the data, important data, a couple days early. And I think you might want to read into what Powell's saying a little bit closer, and that could give you maybe a heads up for what Friday's numbers are. Like if Powell is more hawkish than previously, your non-farm payrolls are probably going to come in higher than expected. If he's a little bit more dovish, or continues to be dovish as he has been in 2024, then maybe that suggests a weaker non-farm number is coming. Nonetheless, non-farms will come out at 8:30 in the morning on Friday, expecting a number in between 210,000 and 190,000. Anything lower than 100,000 is probably bad news. Anything higher than expected, anything higher than like 220, 230,000 is likely going to be seen as negative for markets as well. The unemployment rate is expected to stay the same at 3.8%. Later in the day on Friday, you are going to get ISM services PMI. Last month, that came in well below expectations. You're actually expecting that to rise from 51.4 to 52.3. So we'll see. I think by Friday, there's going to be a lot the markets are already digesting, and I don't know how much of an impact this will actually have. So with that said, I'm actually pretty dang bullish this upcoming week for Tesla. I do think just the earnings that we got, kind of the meta moment where Tesla and Elon have now started to focus intensely on creating shareholder value and giving shareholders what they want. I think that in and of itself is a reason for Tesla stock to go higher, let alone the Fed being bullish, which I expect they will be. 10-year treasury yields are at 4.7%. Odds are they fall following the Fed and probably on the economic data, right? And that can also be a big positive for Tesla, let alone if the Fed is just outright bullish and expecting to cut rates sooner than expected. There's a lot of reasons to be positive this week. The one thing that I will say I'm a little concerned about is the AI earnings with AMD and Supermicro on Tuesday. I think that could sour the mood around AI, and that would definitely be negative for markets. But, I mean, it's not going to be a huge shocker when Supermicro does miss because they didn't pre-announce. And maybe Supermicro just wants to stop doing that. Maybe they're going to kill it on earnings. It's very hard to say. And that's why I said that is the biggest wild card of this week. Overall, though, very bullish for this week. I think Tesla stock's going to likely be in the 180s, 190s, closer to $200 by the end of this week. I do think there's a lot of retail that wants to buy back into Tesla stock or will FOMO back into Tesla. I think there's a lot of hedge funds and institutions that were counting Tesla out for too long, and they have to kind of reevaluate that when Tesla's sitting in the 160s, right? There's a lot of upside from these current levels. If Tesla stock goes back to all-time highs, you're going to make, what, a 200% gain or so? Those are not small returns by Wall Street standards. And I think you can sit here and say, inevitably, Tesla stock will be going back to all-time highs when FSD continues to evolve, enters the Chinese market, as we talked about in the last video, and you get cheaper models, the robotaxi network, all of that, bots down the line, lots of potential in Tesla, and I think those are reasons why people may buy back. And there is that huge short position, which on top of everything else could help drive Tesla stock higher. So I think your next level that you'll probably find some resistance on is this gap to fill level around 188. I think you can pretty easily break above that 50-day moving average, this trend line here, which is going to be at about 180. I think 188 is a bigger test, and I inevitably think we'll probably get into the 190s this week. I think it's going to be a really good week for Tesla. I'm not a financial advisor. I don't have a crystal ball. I don't know everything, and I don't know what the Fed's going to do. I don't know what earnings are going to be, but these are just my thoughts, my expectations, and my opinions. So let me know down below in the comment section what your thoughts are for this week. Is it going to be good, bad, nothing. Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. Thank you for watching. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.